Hi, I'm Steve Spencer from SMB Capital, and today's short video, I want to talk a little bit about a blog post that I wrote last month called The End of Volatility. It was probably the most popular post in 2017 so far, and I thought it was worth taking a couple of minutes to kind of talk about it. So I've been thinking about this topic for quite some time. The decline in volatility that we've seen in U.S. equity markets. And the reason why it's so important in the trading community is a lot of traders' strategies are based on market direction and momentum. And what I like to say is volatility is the lifeblood of many traders, meaning that the more gyrations we see in the marketplace, the greater opportunity there is for many, many traders. And since I started my trading career over 20 years ago, there has been a profound change, I believe, in the level of volatility in the markets because of structural reasons. And we'll share with you the link to that article. The article kind of goes in depth a little bit more to those structural changes. I wanted to offer you a couple of thoughts on things that we're doing on our trading desk that I think has allowed us to perform well the last couple of years and really puts us in a nice position over the next few years to continue to grow and be successful, where we've seen in our space quite a few firms and traders overall struggling. So I give you a few examples of adjustments that traders can make. One thing that I threw in there was this idea: in this type of stable environment, this is a great time to IPO. If you're a company, this is a really good time to go to the public markets, raise some cash. There really isn't that much competition. There aren't a lot of IPOs coming out. That's another trend that we've talked about before on the blog. But the next three things are dealing specifically with people who are trading stocks in the U.S. stock market. Number one is identifying the most in play names. And that's something that SMB has been known for since day one, since we started over a decade ago, is we develop a process and we teach a process, find the stocks that are the most in play. And the reason why this is so important in a lower volatility environment is those most in play names, those names with the strongest catalysts, do create a short-term rush into those stocks or a short-term rush out, creating a higher volatility, creating more trading setups, creating better risk to reward. So that's number one. We write about that all the time on our blog, where we have thousands of blog posts. You can do a search there and read about that topic extensively. We also have a morning meeting every day during the week where we review, in addition to what's going on with the market overall, what are the most in play names, what are the key levels we're watching for potential long and short setups. The next thing that we want to look at as short-term traders is focusing on areas that stocks aren't necessarily being followed by as many quant firms, HFT market makers, where there's going to be outsized opportunities. The best example of that are lower float names, lower price stocks, where you're just not going to have as many HFTs involved. And again, that's another area of large outperformance the last couple of years on our desk. And certainly we talk about it on the blog from time to time. When we teach our strategy series, The Winning Trader, we get into that as well. And these are areas that have allowed our traders to dramatically improve their performance over the last few years and added these stocks to their playbook. And then finally, mean reversion strategy, preferably on the long side. I think we're pretty clear at the beginning of the week when we had our first Sunday night future gap down in quite some time. It was about 18 handle gap down. There was a very easy strategy in terms of finding some market leading stocks as well as the indices themselves to get long. Now, I'm kind of a phase one guy. I will talk about this in a separate video. I like to jump in early, but since that mean reversion trade kicked in on Monday, we've seen another 3 days of up, Tuesday, Wednesday, and Thursday, and we'll save that for another video. But there are certainly strategies that can be employed despite this long-term downtrend in volatility that we've seen over the last decade. And again, the spikes are getting lower and lower. The volatility spikes are making lower highs, lower highs, lower highs. And I personally, based on what I've seen, the structural changes, I don't think that's going to change unless something structurally changes in the market. Others have a different view, not my view. But we'll see. We've been able to survive and actually thrive in this environment, and that's why I encourage you to use our free resources, whether it's the daily video, whether it's the blog, and if you like and enjoy the content that we're producing, then by all means contact us. We do have programs that we offer. Many of the things that or all of the things that we teach on our desk, we offer through various mentorship and training programs.